Welcome, this is James Possible, aka My Forex Yoda on Twitter. What I'm going to share with you is a trade, if you will, and it's actually one trade, multiple positions, and I'm going to show you how, when I'm at my best, this is how I flow. This is how I trade. And I do this more often than not, and so I'm going to walk you through how I will work my way into a trade, manage my risk in the process, and then build a position once it appears that the price is ready to move. Now, I'm not perfect at this, and so, but if you will follow the steps that I outlined in my Twitter feed, and I'll talk about it here as I go through it, you will greatly reduce your risk exposure while at the same time improving your positioning on the trade. And so I'm going to walk you through that. And before I do that, let's just be clear. This is an educational film. This is not advice. I'm not a certified trading expert. I am not a professional trader. In other words, I'm not certified to manage other people's money. So I'm just sharing with you some ideas, some concepts that I have learned over time that have helped improved my results as a trader. And maybe, just maybe, what I share with you today will offer you some insights into your trading, giving you an opportunity to take a different kind of approach to a setup that you didn't really understand that you had. Which brings me to a quick point about the reason this is so important. There's so many memes out there right now in social media, especially in the trading world, where the quote-unquote gurus, nurus, all those kind of things, they will say these little one-liners that seem to be really sexy, right? I mean, you just read them and you think, yeah, that's definitely it. The truth is, a lot of those things don't really benefit your trading. And so it's tough to sort out what will support you as a trader and what won't support you as a trader. Because the person who's sending those messages so often is somebody that has a substantial following and likes and all that stuff. And no, I'm not at that level. I do have a small following, and I'm happy to have that. But you know, the reality is that some of these gurus, nurus, expert type people or personas don't actually trade, and which is kind of crazy, right? Which is cool if you actually know that. And so let's dive into this. I'll break down what I'm doing, and then you know, hopefully you get something out of this. Share any comments and thoughts. You can do that on Twitter. Again, My Forex Yoda, and let's go. So today, earlier this morning, this is what I was looking at on my chart. And give me a second here. I'm going to clear my throat. Okay, so this is the pound New Zealand pair, which of late has been just a monster pair. The moves, the volatility has just been insane. And I just like the feel of this pair. I don't know what else to say. I like the volatility in it, the movement in it. It just works for me. And for each trader, we have to figure out what pair, if we're going to trade Forex, what pair we want to trade. And I will say this, that because this is a pound New Zealand pair, that's a cross. A major, in this case, there's two majors. So you have the pound US and the New Zealand US pairs that are actually being traded underneath this asset. But so when you have a cross, you're going to have more volatility than you will in the majors. So you'll get more movement, and the movement doesn't always correlate to the underlying major pairs. So you just have to be prepared for that if you're going to trade crosses. And this is why many will recommend that you start off with the majors first when you're learning, and then work on the crosses. If you have to. I mean, you really don't need to trade every pair that's out there. So here we are. This is the M5 5-minute chart. I've noted a couple things on the chart. This is something I do as I trade. It keeps my attention and focus on the chart and the price. So so even if I get distracted, I can easily look at the chart and get back to where I was in thought. And the beauty is that I can always look back at this recording and see what I was noticing as I was looking at this trade as it was developing, right? So let's jump in. And I'd already taken a couple trades on this a little earlier. You can see down in the bottom, I have 46, almost 47 pips, and I'm in the green at this point. So let's roll this, and I will talk about what I'm doing. Okay. Okay. So now we're starting to move. Price is pushing down. Now I'm looking at the M1 chart, and I'm looking for this to move back up. So I'm watching the M1, and this morning was tough for me because I had some out-of-town support work I had to do, and I really hated to leave before I got some trades in. So, and I wasn't content with 46 pips. I really wanted it to be 100 or more pips. So I'm trying to trade while being distracted on heading out for my road trip. So this is my first attempt to work into this trade. Now, I'm looking for a reversal. And because I'm looking for a reversal, what I'm doing is one trade at a time. I'm taking a position. As the price moves against me, then I will take another position and close the previous position. Now, what you're seeing right now, I'm still unsure about how I want to handle this. So you notice I closed the one position. Now I keep a 15 pip stop loss, and I closed that one trade. It was 1.5 pips, right? So I'm managing my risk. And so you see there, I even closed the pendings because I'm still trying to understand, trying to get a feel for how I want to handle this trade, when I want to come into it. So I'm looking at coming back in again. Right now, we went from, so I started at 46 plus pips. I'm at 45 plus pips right now. So I'm still green, and you'll understand that that's not as important once I get rolling on this. Okay, so I jumped back in. Going to open the pending. Price is pushing down. I'm going to probably take another position. I'm not moving as fast as I'd like right now. Watching this in hindsight, right? So I took it, and now I'm going to. Did it fill? It did fill, and I just closed the previous trade. So the point here is I'm following the price backwards. I'm managing my risk. So notice my pips. I'm 44 plus pips, so I'm down 2 pips right now. And if this does reverse, I'm in the best position I could be right now. And that's what I'm working towards. What's the best entry I'm going to get on this particular move? Right now I'm adjusting the profit targets. I'm not really looking to hold this position. There's a lot of activity in this area, so if you want, I guess you could call this a scalp. It's just not a quick in and out. I will let it develop, and you'll see that. We'll work through this. And so 44, 46, so we're down 2 pips. Right now we have, going back and forth, but you can see on the unrealized pips, on my open, it's been moving between 3, and now it's going negative, and it's pushing down, and you can tell I'm distracted because I should be taking an entry by now, and I'm not. So I'm not. I'm focused on that. The pending got hit, so the pending order is now active. So I'm looking at closing the earlier position, and I don't know that I do. Yeah, see, I take a second position. Let's see what I do here. Okay, so instead of taking an outright position, I place a pending, and then I close the previous trade. So it was, around 5 and 6, and it came to 3, and then I closed the trade. So I saved myself a little on the pips. Not big, but like again, I'm just working my way into a better position. I just took another position. I closed the earlier position. And you can see when the price moves away from it, the top line, I believe that's order 526, the 526, that's the top line. That's the entry that's active right now. So at this point we're down 5 plus pips. Again, that's not a big concern for me. You can see if I closed it right now, I'd be roughly even for the trade. So I'm feeling really good because I'm managing my risk. Right now if it does move long, I have a really solid entry. And now I'm adjusting my profit on all my trades, because if it does hit the profit target, I don't want to hang around. I want everything to close. So you can see right now it's kicking up to 6 and 7 pips, which would mean if I closed it out at that point, I would be ahead of the game, but only by a couple pips. And that's not why I'm working on this position. And keep in mind, I only have one trade in play. Now, if it did suddenly go push and hit 10, 15, 20 pips, I would close it. But my goal here is to build a position. Now, so it pushed up, pulled back. So now I'm trying to add to it and build some more. Because it wasn't really sitting down there by my best entry. Because if it comes back down there, that's when I'm going to start really building the position. So I'm starting to take some positions here. I'm liking what I'm seeing on the M1 chart that I'm monitoring. And so you see that top one is it's a -5 pips. Yep, I took another entry. So I'm working to improve my positioning, and boom, I just closed the 5 pips. So you can see now we're down to 35 pips. Do I close this one? I think I do. Yeah, it got aggressive. It pushed down really low. So I'm torn. Do I close the trade, or do I work on my position? And I choose to work to build the position. I believe I just closed. Yes, I did. So you can see that those pips pushed up. Those two negative positions were like 7 and 9 pips. So I took them off the table. My pip count is now down to 17. So I have spent almost 30 pips to get to this position. And I'm still not really in a place that's great, right? I mean, it's chopping around. Now, this is a nice pin, looking like it's starting to move me in a good direction. But it's also, you can see it's just bouncing around. And that's what I want to be in. I want to be in the middle of that activity when it's just bouncing around. With every aggressive move against my position, I'm going to add to my position. So right now you saw that went up to 26 pips. Now here's the challenge here. When it's bouncing around, when the price is really moving around like this, if you go in and you start trying to take profit off the table in this middle of this activity, you are not guaranteed a quality fill. So you could go from green to red with just a click. And that's not the goal here. You want to get to a place where the fluctuation in price slows down or settles down, and then you can start to take money off the table. So we're up 50 plus pips on the green, and I haven't taken any of these off the table. Now what I will do, if this pushes up some, the weaker positions, if I get around 3, 4, 5 pips on them, I will start to take them off the table. And what that does, that starts to balance the expense that it took me to get there. So we're now back to 26 pips. And that means we're down 20 pips, right? So I've reclaimed some of it. Really, for the big push, I really want to keep only the best of entries. So again, I'm taking more money taking more trades off the table. So I'm back up to 31 pips, almost 32 pips. So now we're down, what is it, 13 pips? Or 15 pips, something like that, in that area. So you can see how easily that changes. And still really good positioning. I've taken off the weak orders. They were profitable. And I don't know, I'm going to take it off, another one off, I don't know. Watching it in hindsight, I'm thinking, yeah, I should have, right? But that's okay. Again, a distracted day, so the trade's not getting 100% of my attention. All right, let's see, yeah. So now we're up to 32 pips, 30 plus pips unrealized, so we're, you know, if we closed it here, this would be like a 60 pip zone. I just closed a few positions as I'm doing this video. Okay. Not a lot has happened. It's interesting watching this in hindsight. It feels so different when you're reviewing it. And I think I believe I've talked about this. It's a great practice to record your sessions. That way you can go back through your trading just like I'm doing right now. And I can tell you in this review that I missed some very key points of positioning and building. But that's okay. You don't have to be perfect at this. You don't have to be perfect in trading to be profitable, but you do have to manage risk. So prices, looks like it's pushing back down. Now, this is where it gets a little nerve-wracking because it's like, okay, am I wrong? And this is why stop losses matter. You want your stops. Because if the market pushes ultimately against what I see happening, I want it to take me out with a minimum of loss. I'm not going to run down with this thing if it doesn't reverse. I'm just not. You can see we're at this great choppy point, right, where it's bouncing around, working, positioning, market makers are doing their things, orders are being filled and, you know, back and forth, and now it's pushing deeper. Am I going to take, see, I have, what do we have, 2, 4, 6, 7 orders open. See, I missed an opportunity there. Because when that pushed down, but I may be looking at the M1 chart thinking, I don't know if I want to build more. Because once I decide I'm in, right, I start to become aggressive. So that was another position I just took. And at this point, the weakest of the trades, you know, it's around 3 to 4 pips negative. So that's really not too bad. You can see that the unrealized pips down at the bottom left here, it's fluctuating back and forth. So it goes a little bit negative and then it goes a little bit positive. So you see right now it's a negative 16, 10 pips. I'm going to probably take another entry here because I'm starting to get some really nice positioning here. I think I hesitated on that. Yeah, see, I can't believe I missed this. But that tells you how distracted I was. See, I hesitated. So I'm having some doubt here, because look that's a gut-wrenching push. It's like, wow, if I'm off on this, then it's going to push through my trades, and I'm going to take a hit. and that's part of the business. So right now I'm building position. I've decided to myself, okay, I'm building the position. I'm going for it. I'm committing. So as this thing pushes down, I'm going to continue to take the best positions I can. And there's this, I once heard this idea that when you are most wrong, most likely that's going to be your best entries. So notice, when that thing was down there red, that candle was all the way down there red, that's a very iffy feeling, right? It's really easy to doubt yourself. But I'm sticking with it. I believe I'm going to add some more positions here. If it pushes down some. So right now I'm just watching. So I'm looking at this chart that you're seeing, and I'm also monitoring the M1 chart on a MetaTrader 4 with my setups. Look at this push down. See, I think I just ultimately say yes. Yeah, I came back into it. Yeah, it's pushing down some more. I'm waiting for it to push again. Didn't push, so I'd go ahead and close. I don't want to accidentally take a position. So it's tempting at this point to take off some of the weaker trades, but I'm right on the edge. So I need to breathe, because if they're weak, they're only weak because of the spread at this point, not because the trade's actually moving against me. So you got to remember that too. So the spread right now, 1.6. So it's going, I think the spread's moving between 1.6 and 3. And so you got to really pay attention to that. You could have a really strong position, but you're just sitting right in the middle of the spread between the bid and the ask price, and it just giving you a sense that you have a crappy entry, and you don't. So don't fight with the spread. So I'm going to take off some of the weaker ones, because they're, like, remember I talked about this earlier, 3, 4, 5 pips. When they start hitting 5, I like it. So now we have 2, 4, 6 positions open, 5 positions open. So I've captured, so we're back at 51 pips. So we're above. We started at 46, I believe. So we're plus, 5 pips or so. And the unrealized pips are over, between 40 and 50 at this point. They're fluctuating. So I've built this position, and now the price is moving away from it. And I closed the weaker ones. I've taken the profit off the table on the weaker trades. That way, if it does pull back, I've already taken money off the table. So even if it did crash down on me right now, I've greatly reduced the fallout, the cost or the expense of this trade, even if it came through and blew out my my stops. So I just took two positions off the table. We have 3 open. sitting at 71 pips positive with a unrealized fluctuating around 40 pips. And I go ahead and close everything, and you see, so now we're sitting at 112 pips profit. So went from 46 pips to 112 in profit. Now again, remember, I'm distracted. I know I'm distracted today because I know I have to be on the road. So I'm taking my money off the table. Now I'm letting this run a little bit further so you can see how this trade plays out. Sorry about that blank part. I was doing something with the screen. I'm not sure what. But you can see it pushes higher. And so the thought here is that could I have caught more of the trade? Yes, I could have caught more of the trade. Given everything that was happening with me, would that have been the best way to end this trade? I'm saying no. So I'm okay missing out on this, because we had 3 trades open, so let's say I missed another 30 pips. But this is in hindsight, right? So it could have easily pushed back down. So right now I'm flat. I have 112 pips. I'm getting ready for a road trip. I feel pretty good about that. The reality about it, if you're able to capture 100 pips on a regular basis, even if you start out with micro lots, 10 cents a pip, then you grow that, you double that to 20 cents a pip. You're not changing your trading, you're changing the size of your positions. So if you keep doing the same trading, really 100 pips could easily be a $1,000 move with the right position size. So it's still pushing up, but you notice it's not really that bottom dotted line. You notice it's just sitting right on that line and pulling back. This is why I do markups as I'm trading. It keeps me focused on, I don't always have to force myself to look back to the left because I have markups in place that allow me, so I can watch the real-time candle and still understand what happened to the left of me without having to actually look backwards and reassess it. That's why I make the notes. Hopefully you don't mind. I know this is a longer video, but I really wanted to break this down. I wanted to give you a feel for my thought processes as I'm going through a trade, and what's important. So this is about positioning. This is about managing risk. This is also about managing the trade, right? The profit, not just the risk, but also the profit. So initially, as I'm working my way into the trade, I'm taking a better position and I'm closing the weak position. Better position, close the weak. Better position, close the weak. Then the price gets down to a place where it kind of sits and starts to chop around. At this point, I'm going to start to build my position. So I stop closing positions and I start adding positions. So the point is that if my thesis is valid and the reversal happens that I'm trading, remember I'm trading off of the setup that I know. So if the market gives me that move, then I want to take advantage of that move. And the way to take advantage of that is by opening multiple positions. Now, in all fairness, in this particular environment, I can close trades out of order. So for U.S. traders, that's not going to be the case. So you do have to manage your first in, first out trades. So that adds a little bit of complexity to it. But there, and you can manage that on those trades by shifting your stops. So in other words, on your weakest trade, just move your stop up and let the stop hit. You can even move your profit to a negative place and let the take profit hit and close your position. Okay, so even with the first in, first out rules, you can manage your trade as I am doing. This particular environment, it's granted, it's much easier for me to do that. So anyways, I hope you enjoyed this. I hope you found some benefit in this. Yes, I'd love to share more of these videos. You tell me, I mean, what topics are you interested in? What are the things you want to talk about and discuss? You know, what would you like to see? I'll probably share more videos like this one, because this is really an important aspect of trading that you're just not going to have that discussion had in too many places. You know, it's a myth that all you need is a setup. There's so many other pieces to trading that can work for you or against you, and if you don't understand those pieces, even with the best of setups, you're not going to get to where you want to get. So this is James Possible. Thank you for joining me again. You know, I know I'm a talker, so this probably took a lot longer than it needed to, but hopefully you gained something from what I shared, and hopefully you appreciate it. I know I enjoy sharing this, and especially if you're getting value out of this. Please, if you found this valuable and helpful, you know, like, share, retweet, all those kind of things, okay? So again, James Possible, aka my Forex Yoda on Twitter. So that's MyForex Yoda, YODA. All right? Take care.